Sellers, you do not have to pay capital gains taxes when you sell your building or your personal residence. Let's talk about your three choices. Number one, you can just go ahead and pay your taxes if you want. Number two, you can do a 1031 exchange if it's a rental property and defer your taxes that way. Or number three, for a home or a rental property, you can work with a tax planner to eliminate 100% of your taxes. I've always been looking for an exit strategy for my clients. I've looked at charitable remainder trusts, qualified intermediary installment sales, and seller carrybacks. I looked at a few other things too, but they didn't end up to be good strategies for my clients. And then I met Bruce Jones from the Tax Wealth firm. Bruce is a ultra experienced financial planner. He's been in the financial services industries and the tax planning industries for 5 decades. I recently interviewed Bruce and I clipped up the interview to bring you the most important aspects and the most important clips from that interview. Let's hear what Bruce has to say about his experience in the financial services industry, as well as his experience as a tax planner with taxwealth.com.
Okay. Well, on a personal level, this is my 54th year in financial services. I started back in 1970, first got involved in tax planning in late 73. I was very fortunate in that I trained under a guy who did international tax planning, and I was actually cross-trained in financial planning as well. Well, for 41 years until about roughly 8 or 9 years ago, I was also in the securities and financial planning industries while I was doing tax planning. I retired from financial planning and securities about 8, 9 years ago. And instead of fully retiring, I decided to continue what I'm doing in tax planning because I thoroughly enjoy it. So I kept my company, which is called Tax Wealth. I founded Tax Wealth 36 years ago in 1988. And we are not a financial planning firm. We are a tax analysis and solutions research company where we come and support in proactive tax planning to CPAs and attorneys and financial advisors of all types to help solve their clients' tax concerns when they're selling capital assets, be it real estate, a business, or whatever it might be.
Let's look at Bruce's website at taxwealth.com and review some of the information on it. Okay, so we're here at taxwealth.com. In innovation-driven tax solutions. TaxWealth strategically protects wealth by reducing or eliminating unnecessary income and capital gains taxes through experience-driven AI-assisted tax solutions that leverage hidden economic incentives in the tax code. Leveraging the tax code, Congress has enacted laws that provide significant tax incentives to stimulate economic activity, but these opportunities often remain hidden within the intricacies of the tax code. TaxWealth is a tax analysis and solutions research firm that combines decades of experience and client success with AI-driven technology and an extensive network of hand-picked tax professionals to continuously discover, validate, curate, and execute unique strategies that leverage these hidden opportunities in the tax code. When harnessed, our robust tax code compliant catalog of strategies for past, present, or future tax scenarios enables our partners and clients to significantly reduce or even eliminate income and capital gains taxes. Okay, here are the two main people at taxwealth.com. Bruce Jones, founder and CEO. Like he said, he got in the financial services industry in 1970. He's very has a strong wealth of knowledge about everything taxes and finances, financial planning, etc. His partner, Amy Davis, is a managing director. She has an extensive background in personal and business management, finance and service, and specializes in business development, client relations. So these two are the main people that I work with my clients when I have a client that's thinking about selling a property and wants to eliminate their capital gains taxes. So I highly recommend at the end of this video, you go to taxwealth.com and fully look at the website, look at Bruce's background, Amy's background, and they have some case studies there. So, yeah, it's a fabulous tool to understand how to eliminate your capital gains taxes when you sell your building. Now, Bruce and TaxWealth, they work with a large variety of other professionals who refer them clients. So I wanted to ask Bruce, what kind of professionals, what kind of clients is he serving at TaxWealth?
Well, first of all, understand that the vast majority of the clients we serve are other advisors, financial planners, real estate brokers, business brokers, CPAs, enrolled agents, accountants. There's over 70,000 active pages through the tax code today. No
Right.
one knows it all. Yeah, we're very collaborative. As I said, no one knows the entire tax code. I don't. No one does. So what we do, we collaborate with other professionals who are specialists in their specific areas in their craft, and we work collaboratively with them to solve the solutions that need to be solved. And again, in line with what the client themselves need to be comfortable with, because ultimately they're the ones who make the decision. No one else, nor should anyone else make the decision for them. So they need to sleep comfortably at night with the decision that they make, but that can only be based upon being educated.
The reason so many professionals in the financial services industry refer clients to Bruce is because they know that he's got the expertise and the knowledge to help solve that capital gains tax problem when the client is selling a business, an apartment building, a personal residence, a limited partnership. And, Bruce networks with a lot of these guys, like he said, the CPAs, financial planners, tax attorneys, stockbrokers, all these guys. So they are constantly sending him business because they know that Bruce has the expertise to solve their clients' problems. Here's a few more thoughts from Bruce on the process of working with clients and a really interesting take on CPAs and accountants and taxes.
So we want to give them what their choices are. As I said earlier, there's no one size fit all. So we want to give them the best choices that we know are supported by law that they can consider along with their CPA, along with their attorney, along with their advisor. They're more than welcome to be part of this process and should be. But it's important to understand what each of the roles are of each of the advisors that are serving them, meaning the client. Most CPAs and accountants are not tax planners. They've never been trained in it. I refer to them as financial historians. Now, that's not a slam against them, it's just fact. They take information that has already occurred by the client, filter through the laws that they need to filter through to come up with an accurate tax return. And of course, that is very, very important. But that is not tax planning, that's accounting. Generally, in my experience, the CPAs view tax planning as perhaps inviting their clients to come in to their office, maybe the last quarter of the year, projecting out what the taxable income is, making adjustments to that for withholding, and maybe suggesting they might buy a computer or some other equipment before the end of the year to get some write off. Again, that's much more allocated toward accounting than it is effective overall proactive.
Now, let's ask Bruce, how exactly does this capital gains tax elimination program work?
Okay, well, uh, let's go a little generic here. One plan approach that we use, I call it the 100 to 1 plan because that's indicative of what it accomplishes. Under law, we can take 100% of the taxable gain and a sale bring it down to
Wow.
1%. Give the, give the seller added income tax deductions to help, which would offset the rest of the taxable income that they have on the sale, plus income taxes would be saved, and the sale proceeds go into an environment that is creditor protected and free of estate taxes, which the client themselves fully control to reinvest however they
Got it.
choose.
Okay. Is there some kind of charitable thing involved with this methodology?
Yeah. There is a charitable component to it. It is not a charitable remainder trust. That's what most advisors default to. And I've done several of those through the years as well. And they can be very effective. But with a charitable remainder trust, the generating the tax deduction is entirely different than what the deduction is that is generated through this particular plan approach. And this particular plan approach is not new. It's been around for 30 years. Basically, what happens with that is that a single member LLC is set up and the property is transferred into the LLC. There's no tax impact because the IRS considers it what is called a disregarded entity. And then the asset is appraised by an IRS approved appraiser for estate planning purposes. Then what occurs is that the client who owns the LLC as managing member, owns 100% of it, then gives away 99% of the limited partnership units of the LLC to a charity. And that's going to generate a huge tax deduction. In general, they're going to get up to 80% of the value of that asset, net of any debt, charitable tax deduction, which is up to 50% of their adjusted gross income. Any deductions that are not used for that current year that is above that figure can then be carried forward for up to 5 more additional. But what they're not
Gifting.
they're gifting the limited partnership units of the LLC to the charity. And they can choose any charity they want. We have some suggestions that we ask them to consider as far as which charity to use for specific reasons. But nevertheless, the charity ends up with that 99% of the LLC. However, keep in mind that what they're getting are non-voting, non-control interests of the LLC. See, and that's what allows us to reduce the taxable gain from 100% to 1% because taxability follows ownership. And when the asset is sold, it's the LLC selling the asset, not the original owner, 1%. So they're going to get 1% of the transaction. And the charitable tax deduction that they get will offset that. But because they're managing member controlling the LLC and the assets in the LLC, after the sale occurs, all the sale proceeds are retained by the LLC under their full control that they can turn around and reinvest however they choose.
I asked Bruce a really important question. Now, normally I'm talking to landlords and investment properties and 1031s and how to save taxes when you sell your building. But I asked Bruce, is it possible to eliminate your capital gains taxes when you sell your personal residence? Now, a lot of my clients own personal residences that they've owned for 20, 30, 40, 50 years even. So they might have bought something in 1980 for $150,000 and now their property's worth $2.5 million and they want to sell, they want to move out of state or whatever, but they're looking at a huge capital gains tax bill. So here's Bruce's answer.
Yeah, we can certainly accommodate that as well. We've done personal residences using the 100-to-1 plan, for example, if it made sense. But what you want to keep in mind, too, is the homeowner's exclusion that's available to them. And if they're married, that's up to $500,000. So what we oftentimes do is separate that amount out from the planning so that they have that cash and then put the balance of the sale into the planning approach that we use to solve the tax issues. So they have immediate cash that way, tax-free, and then cash flow through the other process, or actually have access to the sale proceeds, depending upon what they want to
Got
accomplish.
it. I then asked Bruce how he determines exactly which strategy is the right strategy for certain clients.
Well, what we do for them, once again, as I said earlier, once we identify what their specific needs are, then we find solutions for that need. For example, if they're selling a capital asset like real estate or a business, then we identify what their specific transaction is all about, what the projected taxes are, where those taxes come from, how much they would net out in after-tax profit if they don't do any advanced planning. And then we come up with one or more solutions that we know are supported by law to solve the tax problem and maximize the profit that they end up with after escrow closes.
Now let me show you a sample pre-sale tax analysis and cash flow projector that was prepared by Bruce Jones of Tax Wealth for one of my clients a short while back. And he will do this free pre-sale tax analysis for you, again, free of charge, so he can show you what the numbers look like. A, how much you would net if you had to pay your taxes, and B, how much you would net by not paying your capital gains taxes. And folks, it's a big difference. So let's share my screen and I'll show you. Okay, so here's the pre-sale tax analysis. And this person had an apartment building that was, going to blow the screen up a little bit. So this person had a apartment building that we are selling for $3.5 million. And he has the net sales proceeds after commissions and closing costs, the original purchase price, capital improvements, depreciation taken over the life of the property. And then he figures out what your taxable gain is. In this case, it was $2,715,000. They have all the numbers here: depreciation recapture, your net investment income tax, and this person was going to have a tax bill of $1,145,000 roughly. So after selling the property for 3.5, he would have a net after-tax profit of $1,466,000. Now, by using the tax deferral strategy that Bruce talks about in this video, this client was able to eliminate those taxes and was walking away with $2,398,000 after paying the mortgage off. So he was able to get an additional $931,000 as compared to if he had to just pay the taxes. So you can see this is pretty powerful. I highly recommend, if you're considering selling a property, you don't want to 1031 exchange it, or it's your personal residence that's highly appreciated and you're looking at a tax bill, a huge tax bill. Either way, I highly suggest we make an appointment for a Zoom meeting with Bruce, and we will have him prepare the pre-sale tax analysis so you can look at the true numbers. And this is information that you can share with your CPA, tax attorney, accountant, whatever, tax advisor. Now, the best way to do this is let me know what property you are considering selling. What I will do is I will determine the value of the property. I'll do a market analysis and figure out what the property's worth. Then I fill out a pre-sale tax analysis input form on the web that Bruce provides, and I put in all the pertinent data: sales price, depreciation, loan amount, what you purchased the property for, what year you purchased the property for, if you're married, if you're single, etc., etc. Once all this information is input on the intake form on the web, Bruce will be able to prepare this tax analysis for you. Once that pre-sale tax analysis is done and you have that information, that's when we want to make an appointment with Bruce so he can go over the information, provide you some additional information on how to execute this strategy, and then you'll have great information to share with your tax attorney, your CPA or accountant or whatever, so you guys can determine if this is a good way to go to eliminate a lot of capital gains taxes that you would otherwise owe. Now, this isn't for everyone, I understand that, but for the right people, this is a great opportunity to get way more cash in your pocket when you sell your building. So if you want more information, let me know. We can do I can input the information to Bruce's website so he can do the tax analysis for you. Just give me a call. Let me know what building you're thinking about selling. Let me know the loan balance, and I'll take it from there. That's all the data that I need from you. I will be able to provide the rest of the data for Bruce so he can do one of these complimentary pre-sale tax analysis for you. Guys, this is important information. This is cutting edge stuff. You know, wealthy people, millionaires, multimillionaires, billionaires, do you think they pay capital gains taxes when they sell an asset? I don't think so. They have tax attorneys and accountants and all kinds of people to help them not pay capital gains taxes. This is available to the average mom and pop property owner, to the mid-level millionaire guy, to the billionaire. It's available to everybody. Take advantage of the free consultation with Bruce Jones at taxwealth.com. Why would you consider selling a property and giving a huge chunk of money to Uncle Sam and unfortunately Gavin Newsom, who's just going to waste your tax dollars? So I look forward to hearing from you. Hit me up, call me, text me, email me. We'll have a conversation about your situation. I'll gather the pertinent data about your property and your situation. I'll input it into Bruce's website intake form, and we'll let you know what the pre-sale tax analysis looks like, and we'll save you some money on taxes. Guys, thanks for watching. I really, this is really important to me that I can help people like you that are watching this video eliminate paying the government so much money when they waste our money left and right. So again, hit me up. This is Derek Ruiz, eXp Realty, commercial and residential broker. I look forward to talking to you soon. Take care.